Yeah, I think it's good to start. Yeah, good morning, everyone. Welcome back. I hope you are all doing well. So, before we begin today's session, let's quickly recap what we discussed in our first class. So, yesterday was more about like getting to know each other and understanding the journey we are about to begin. So, we it started by introducing ourselves and we discussed why each of us like choose SAP FICO as everyone had a different goals. Like some wanted to have a career switch, some wanted to upskill, while others wanted to gain some confidence and have a hands-on on knowledge. And then we understood what ERP is and why business need it. And we also learned that instead of different departments working separately, and a ERP system integrates all business functions into one platform. And along with that, we discussed about the different SAP modules like MM, SD, and PP. And parallelly, we also understood about the technical modules like BASIS, then BTP, and CPI, which how they integrate with each other and how we parallelly work with those consultants from the technical perspective. And finally, like a focus area that is SAP FICO, where we understood the difference between FI and CO. So FI focus on the financial accounting and external reporting, while CO helps management to with cost control, budgeting, and profitability analysis. And next, we also discussed about the different career opportunities which are there right now in SAP FICO, with how how you guys can become from end user to support consultant and implementation consultant, and along with that how you can reach to the senior consultant and solution architect and beyond. And we also spoke about the different project types like support, implementation, rollout, and migration. And finally we talked about the impact of AI, and I've explained you like we can consider the AI as a powerful tool which helps a consultant to become more productive, but it cannot replace a consultant who understand the business process and who communicates effectively and solve the real business problem. And I left you with one important thought that if you are in this journey, don't aim to become like someone who just simply know the SAP. I want you to become a consultant who understand the business and solve the real business problems. So now that we understand why SAP exists and where FICO fits into the bigger picture, so today we will be learning the more of like building the foundation by learning basics of accounting, I mean the language of finance. So once we understand accounting, so learning the SAP FICO becomes much easier. So before getting started, if you, I just wanted to like know if you guys having any questions related to our first session which happened yesterday. If anyone wanted to come on, unmute themselves if they're having any questions, or else you can just drop them in the chat. Okay. Okay, cool. Yeah, thanks for that. So today we will be covering more of learning the accounting side of the business. I mean, we will be seeing why do we need accounting in real time. So before I explain to you, I want to ask you all something. So imagine like that tomorrow you were starting some business. Like let's take example of that you're gonna start a business like owning like running a coffee shop. So just imagine it for a minute. Now tell me, What is the first thing you will be spending money on? Can anyone come on, unmute themselves and please
Investment.
Office
answer
location,
this?
office location and procurement.
Uh, Correct. And what else?
Investment.
Okay, exactly. What else? Like, uh, there will be
Capital.
many things where, sorry.
Capital.
Okay. Anything else? Capital, yeah. What else you think like we will be spending money on to start our coffee shop business? Marketing, that's good. Anyone wanna try answering? No problem. Like you can drop them in the chat. Yeah, location, business model, very good.
Equipments.
Great. Coffee beans, correct. Investments, right. Cool. So basically we will be spending more on the expense side like raw materials, milk, sugar, electricity, marketing, license, all that stuff, right? So within just a minute, we have already have more than 8 to 10 different expenses. So now let me ask you another question. Suppose you run this coffee shop for 6 months and every day the customers are coming to you and you are buying a milk, you are buying a coffee beans, you are paying salaries, you are paying your rent, and the whatever the customers are paying, they are paying you via cash, UPI or a credit cards. So now after running the business for 6 months, how will you know whether your business actually made a profit or loss? Can
Tracking all the
someone answer
transactions.
this?
Tracking the
Sorry?
Tracking all the financial transactions.
Or is that enough to know like whether you made a profit or loss?
We need the right ERP to track all the financial transactions.
Correct. A right ERP is the one which where we'll be using to track all the finances. Anyone wanna try answering? Anyone
I
want to
think
answer this question?
I think we need liabilities and assets. So, Shravan.
Yeah, that is like a secondary part, right? But once you started running your business, the cash is coming to you. But how do you able to know like exactly how much profit or a loss you made?
balance sheet.
Balance sheet, see, balance sheet is something you will be preparing at the end, right? So I will tell you one thing. So the most common myth we will be saying is that I will check my bank account. So that is also not enough, right? Because if you check your bank account, the balance you will be seeing that will be like increased only. There might be chance that you might have taken a loan, so the loan amount and the cash which have been inflowed will be equal.
How to prepare
Tracking
a
and
profit and
bookkeeping.
loss account to know the what exactly the profit.
Not enough. So let me tell you. So simply looking at a cash doesn't tell the complete story, right? So that exactly where the accounting comes in. So basically, accounting tells the complete financial story of a business. So think of it like a language of a business. So just like we spoke, like in day to day, how we speak with the different languages, right? So similarly, accounting is the language of business. So it helps the business to communicate its financial health. Without accounting, a business is almost like driving a car without any speedometer. You will be simply moving, but you will know, you will not have any idea where are you going. So now let's understand what accounting helps us to do. So this is clear, right? Like how we will be, like how the accounting helps in the business to track their spending and profit and loss. Anyone have any questions here?
Sorry, I did not get it. Whatever you are on, I did
Sorry.
not. I did not get your answer. The question: how we
So
manage?
basically, I have asked that exactly how we will be knowing that we made a profit and loss when we are
Mm-hmm.
running any business, right? So I got an answer that we will be using ERP tool to track all the expenses. That is correct. But there's like how we will be performing, like how we will be segregating the transactions which are more of like profit for us and which are more of like loss for us. So in that case, I've explained that accounting is something which can be used to make the track of those expenses.
We can track daily transactions.
We can track, but the segregation of the expenses from profit and loss can be happened via accounting only, right? When we do the accounting.
Yeah.
Yeah, so that's what I've explained. I hope now it's clear for you.
Yes.
Yeah. So right now we will be covering the purpose of accounting. So the first purpose is to track money. So accounting helps us to track every single rupee from where the money came from where the money went, and how much is left. Simple example, you started a coffee shop with like for example 10 lakhs rupees. So after 1 month your bank account show 8 lakhs. So now the question is where did the 2 lakhs go? So there might be a several reason, right? We might have spent it on rent, we might have bought a furniture, we might have paid our salaries to employees. So all these expenses or a transaction which are happening, here the accounting gives you an answer because everything is documented, right? And the second purpose is to measure the profit and loss. So now suppose in 1 month your sales are like 5 lakhs and your expenses are 4 lakhs. So how much did you make in a profit? 1 lakh, right? Simple calculation. But imagine there are 5,000 transactions every month happening in your coffee shop. Can you calculate manually? It's impossible to calculate because there will be more of transactions happening. So that's why companies maintain accounting records. And accounting tells us, are we earning money or we slowly losing money? If losses continues, the company can immediately take a corrective action. And the third purpose is we able to know what we own. So now imagine like we started off the example with a coffee shop. So we might have bought the coffee machine like worth of 4 lakhs, and we might have bought the furniture worth of 2 lakhs. And we have some cash in bank. And there will be other assets like laptop, air conditioner, everything which the business owns. So in accounting, we can call them as a asset. So don't worry if you don't know this term today, but we will learn each one in detail during the course. For now, just remember, asset is something which the business owns. So similarly, accounting helps us to understand what we owns in terms of asset. And the next purpose is what we owes to other. So similarly, accounting helps us to identify what we owns, right? And it also help us to understand what we owe to other. So now imagine you borrowed a loan from a bank something like around 10 to 15 lakhs from the bank, and based on that, you have bought the credit, like you have bought the furniture on credit, and you haven't paid one supplier, like any one of the supplier yet. So this money you have to pay later, right? So whatever the money we need to pay, that we will be considered as a liability. So accounting also tells us how much money we owe to other. So I will give you a simple example here. So like we use like daily Google Pay, GPay, and Paytm to carry out our day-to-day transactions, right? So like we will be paying 100 here, 200 there, and 2000 like 500 somewhere else, right? So after a month, if I ask you how much did we spend on food, how much did we spend on travel, will you able to remember? Probably not, right? But when you open your banking app, every transaction is recorded. You know exactly where your money went, and that is very a small example of account. But companies simply do the same thing only in like whatever, like we see the big organization, they also do the same thing. But instead of hundred of transaction, they record millions of transactions. So whatever money we borrowed from anyone to procure anything related to furniture, related to business, that we owe to pay, right? So accounting helps us to understand how much money we are yet to pay to the supplier or the creditor. And the next purpose is legal and tax compliance. So if you are running a business, you can't simply say that I don't wanted to do the accounting. Will you think, is it possible that I won't be doing accounting, I will just run my business? Do you think will it be possible for you to do that way?
No.
No.
Correct? Because we need to submit several reports to the I mean the regulatory compliance, and governments require a business to maintain a proper books of accounts. And similarly, we have to calculate the taxes which we are to liable to pay the government. Right. So if accounting is not maintained properly, then companies can face penalties. So accounting is not just useful, it's legally required. And the next is it will help us to take a better business decision. Suppose your coffee shop sells multiple items in your menu like coffee, tea, sandwiches, or cake. That can be anything. But after 1 year, you realize that your coffee gives you a maximum profit and your tea gives you a very little profit. And similarly, one of your item like cake, which are not getting sold and they are not giving you much profit. So now what decision will you take? Maybe you will increase like varieties, like you will be bringing up coffee varieties and you will reduce your pastries, I mean the cakes, and you will launch a premium coffee. So regarding this, how did you make this decision? It won't be possible by guessing, right? You will be using your existing accounting information. So that's how like accounting converts raw transactions into meaningful business information. So if you see like every CEO, CFO and finance manager and whoever like who runs the business, they depend on accounting reports to make a final decisions. So now you saw the six accounting purposes which are essential for the business. Now let's talk about how we will be connecting this with the SAP FICO. So now many of you are joining this course to become a SAP FICO consultants. So here is an important point. SAP does not create accounting. SAP only automates the accounting. So the accounting principle, whatever you have seen so far, that remains exactly the same. Whether the company uses any other software like Tally or Oracle or SAP or Excel, whatever they are using, any other ERP, The accounting concepts never changes. So that's why before learning SAP, we first need to understand accounting. And once the accounting becomes clear, so the learning SAP becomes much easier. So always remember one simple sentence, that is, accounting is the language of business, and SAP is we can consider as a technology which helps the business to speak that language. So till here, if anyone have any questions or any doubts, I'm ready to answer those before moving ahead.
No from my end.
Okay, so before we jump into SAP screen and configuration, it's important to understand this accounting language. So once your accounting foundation is strong, then it will be easy and it will be easier for you to understand the SAP FICO subject. So moving on to the next, we will be seeing the accounting terms. Right now we have saw the principle of the accountings, and we will be now seeing the accounting terms which we use generally in day-to-day operations. So now we just understood why accounting is important. So now let's learn the five basic accounting terms that every business uses. So I wanted to start with an example. So imagine that we are already running the coffee shop and we have started this coffee shop with the investment of 10 lakhs rupees from our personal saving. So now I have a question for everyone. What do you think your business has right now?
Capital for the business.
Exactly. We have a capital that is of when we started with the 10 lakhs in a cash. So this cash belongs to the business and it will be used to buy a furniture, machines, and we will be using it to pay rents, salaries, and we will be covering the other expenses, right, with the existing cash which we have. So here the first accounting terms comes into the picture, that is assets. So before me explaining, anyone have any idea on what assets are?
Long-term investments.
Okay, anyone?
Equipment, buildings, inventory.
Very good. So assets are simply things that a business owns or a control and that will provide you a future value. So think of an asset as a resource that will help your business to operate and as well as to make a money. So asset can be anything like cash, furniture, computers, your coffee machines, the place, the inventory, and the vehicles. Here the important point is to remember that it owns and controls and it will provide you the future value. So in our example, we consider the cash which we are having to start a business, that is an asset. So cash is an asset, right? So cash is an important asset because it will help us to purchase everything else. As a business grows, the cash may reduce, right? Because we spend it, but we receive the other asset in return. So you might be having a question like, what other asset we will be receiving in the business? So for example, we bought a coffee machine for 2 lakhs. So here our cash got decreased by 2 lakhs, right? But we now own a coffee machine worth 2 lakhs. So if you see, one asset simply changed into another asset. So the total value remains within the business only. Are you guys able to get it right? What
Yes.
Yes.
I'm trying to say?
Yes.
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 Yeah. So that is how asset is the something where you how the business it simply changes into the another asset when you when you started doing your business for the long term. So now moving on to the next accounting term, that is liabilities. Anyone here who knows what liabilities means? Can someone who
Bank,
knows?
bank loans, and we borrow
Correct,
the money to run the business.
correct,
And
A liability is a financial obligation or debt owed to another party.
perfect, perfect. Yeah.
Company
So
owning
now
others'
let's
money.
correct. Yeah, that's great. So now let's change the situation. Like we are already running our coffee business for a long time, and we realize that whatever the initial investment we bought, that is 10 lakh rupees, is not enough, right? Because our business is getting expanded. And we reach out to bank asking for a loan, and the bank grant us like 2 lakhs rupees loan, additional loan for expanding our business. So now let me ask you, who own this 2 lakhs? Whether it's bank, whether it's you.
Sorry, I didn't get your question.
Suppose like we have already started a business, right, with the 10 lakh rupees of investment. And after running for a couple of months, we realized that we need a additional capital. So we approach to the bank, and bank agrees to grant a loan of 2 lakhs. So now who own this 2 lakhs?
Bank.
Exactly, the bank will be the owning this 2 lakh. Can you keep it forever? Like the money which you bought from the bank, will you keep it forever with you?
No, we have to return it.
Yeah, definitely. We have to repay it one day. So the amount which we bought from the bank is called as a liability. So liability is a simply, as someone said, is a money or a obligation that we owe to someone else. So the common examples of liabilities are like bank loans and salary payments, like unpaid salaries or the outstanding electricity bill and whatever the payables which we needed to pay to the suppliers. So in our example, we bought a loan of 2 lakhs. So this is a liability because we have to repay this in the future to the bank. So simple way to remember this is that assets are what? Assets are something which the business owns, and liabilities are something which the business owes. So moving on to the next, that is equity. So now another interesting question I wanted to ask: who started this business? You, right? And who invested this capital 10 lakhs? Even that you only. So does the business owe this money to the bank?
Yes.
No, correct. Because this is your own
No,
contribution. Like when you started the business, you bought the 10 lakhs into the business and this is your own money. So you won't be like owing anything to the bank. So this is called as a equity. So equity represents the owner investment or the ownership we can say in the business. So it's often called as the owner capital. So for example, you bought the 10 lakhs rupees and bank give you the loan of 2 lakhs. Now the business has a asset of 12 lakhs. Where did this 12 lakhs come from? So the 10 lakhs will be from your side and 2 lakhs from the bank. So that means like asset will be equals to equity plus liabilities. So this is like one of the most important equation in accounting. No need to worry. It will be feeling new today. We will be using this equation throughout the course until it becomes like a used to for us. So moving on to the next accounting term, that is revenue. So we have already opened up our coffee shops and the customers are visiting every day, and someone are buying the coffee and someone are buying the sandwiches. and someone are buying the cakes, and money started coming into your business. So whatever the money which we have earned by selling the products or services, that is called as a revenue. So the revenue is then the income generated from the normal operation of a business, like selling the coffee, tea, sandwiches, and all that. So that can be termed as a revenue, like whatever item which we will be selling, that can be termed as a revenue. So revenue tells us how much the business has earned before considering the expenses. This is important. So let me ask you one more question here. Like if your coffee shop is selling a coffee worth 5,000 in one day, is that a revenue for you? It's a revenue for you, right? Because like whatever you are selling, you are getting the money in return. So that is revenue we can consider. So that is exactly the accounting term revenue means. So moving on to the next term, that is expense. So now whatever we are earning, will it stay with us? Of course not, right? We have to
No.
pay it to rent, employee salaries, bills, milk, and whatever we are procuring in terms of raw materials and maintenance, marketing. So whatever we are spending on behalf of whatever we are earning, that is called as a expenses. So expenses are the cost which are incurred to run the business and in order to generate the revenue. So simple, like for example, as we are considering the coffee shop, we will be needed to procure the raw materials, we needed to pay to the vendors for the procurement. So that are all can be considered the expenses. So as of now, we have understood all the accounting terms. Now we will be understanding how we will be connecting this to the SAP. So whenever a transaction is posted in SAP, whether it's a customer invoice, whether it's a payment, whether we purchase any asset or any salary payment, the system will automatically impact one or a more of these five accounting elements, like whatever we have seen so far. So whenever any transaction is posted, the system will automatically ultimately impact one or a more of these five accounting elements. So that's why before learning SAP FICO, we must understand these accounting concepts. So once these accounting concepts are clear, understanding SAP posting becomes much easier because you will know why the system records a transaction the way it does. So in the SAP, in the upcoming classes, we will see how SAP automatically capture these transactions and keep the accounting records accurate. So moving on to the next topic, I'm sure that you might heard about this term golden rules in accounting. Anyone here who have already heard this term and can able to speak about this golden rules in accounting? Can anyone unmute themselves or else being in the chat if they're already aware about these golden rules? Okay, I am considering
Debit,
this silent
debit the
as
receive,
okay.
debit the
Real
receiver,
Okay,
account,
credit the giver.
okay, that is the one
real,
of the golden rule.
real
What
account, personal account, and nominal account.
Correct.
debit, what comes in, credit, what goes out.
That is real account.
Correct.
Mhm.
So that is all like whatever you have said so far, there are that are all the golden rules of accounting. On that basis, we will be performing our accounting. I mean, we will be um, drafting the entries in the system during the business operations. So now we have understood the five basic accounting elements like asset, liabilities, equities, revenue, and expense. Now let's move to the another important topic, that is golden rules in accounting. Many of you may have already heard about him, like you already answered about golden rules. So you might have been wondering why will these questions be asked in the interviews? So the answer is yes. Even today, like many of the interviewer ask about the golden rules because they wanted to check your accounting fundamentals. Because if you see maximum interviews, they will be asking this question like, what are the golden rules in accounting? So it's important for us to learn and before the attending those interviews. So let's understand them in a very simple way. Why were these golden rules were introduced? So before modern accounting softwares like SAP existed, accountant used to maintain books manually. There were no ERP systems and there were no any automated postings. Everything was like written by hand only. Like they used to note down the journal entries in books. To make sure every transaction was recorded correctly, accountant followed three simple rules. And that rule became and known as the golden rules in accounting. So let's understand one by one. So the first golden rules is personal account. So personal account relates to a personal person or a organization. When I say person, it doesn't mean only an individual. It could be like customer, vendor, or employees, banks, companies. Anyone or an entity that can give or receive money, that can be considered as the personal account. Here, what the rule says: debit the receiver,
Credit the
credit
giver.
the giver. Correct.
So, Shravan,
So
can we name
let's
this as types of accounting as well?
we can name them as a types of accounting as well, but generally, like the term which is used that as a golden rules in accounting. You can name it
Okay,
like
so
types of account.
yeah, if they, in the interview question is like, what are the types of account? We can answer this question as well. Like, there are
Correct,
three types:
correct. Like
personal,
personal, you
real,
can
and
answer them as a personal, real, and nominal.
nominal. Yeah, yeah.
So now let's understand this personal account, I mean the personal account with an example. Suppose we bought a furniture for our coffee shop with a supplier like ABC supplier on a credit. So according to the rule, ABC supplier is the giver, right? Because he is supplying the furniture. So therefore, as per the accounting rule, if you see here, what will be the entry? Like ABC is the giver. So as per the personal account, it will be credit ABC supplier. Because as per a personal account rule, debit the receiver, credit the giver. So in our case, what we are getting furniture and who is giving ABC supplier. So here we will be crediting the ABC supplier. And if you see later who will pay that supplier and I mean who will receive the money? ABC supplier, right? So then that time what we will be doing? We will be debiting the ABC supplier. So don't worry too much about remembering every example today. right now focus on understanding the logic. So if we see when we started the business, we bought a furniture on a credit from a supplier. So as per our personal account rule, what it suggests, like we should debit the receiver, credit the giver. So when we are bringing the furniture into a business, what we will do, we will credit the giver. So here who is the giver? The supplier. So we will credit the ABC supplier. But later on, what happens? We are ready to pay to the supplier. So that time, what happens? As per the supplier, as per the accounting rule, who receive the money? The supplier. So that time we will debit the supplier. So that is the about personal account. And moving on to the next, that is real account. So real accounts are the accounts related to the things which business owns. So right now, what the example we are carrying, that is coffee shop. In that, what we own cash, we own building. I mean, building the place where we are running our shop. We own the machinery, the coffee machinery. So all these things which we own are part of the real account. So what the rules say here, the golden rules say, in case of real account, debit what comes in,
Credit what goes out.
sorry, credit what goes out. Credit what goes out. So let's take a simple example. Suppose you bought a laptop to make the to record the transaction of your business using the cash. So what came into the business? A laptop,
Laptop.
correct? And what went out?
Yes. Cash.
Cash.
Correct. So what we will be doing as per the accounting entry? Like what we'll be doing as per the rule in terms of real account?
Whatever we
Here,
receive
what
in the
we bought?
business, we will record.
Sorry, can you come again?
Whatever we receive in the business, we will record on debit side, and what is going out from the company, will record on credit side.
Correct.
Uh,
That
laptop
perfect
is a
answer.
credit. Laptop is a credit. Cash is a debit.
No,
No,
reverse.
actually, laptop will be debit
Debit. Yeah, yeah.
Yeah.
Sorry.
because if you see the accounting rule for the real account, debit what comes in, credit what goes out. Here, laptop is coming, right? So what we will do, we will debit laptop, and what is going out? Cash. So the
Yes,
cash is
yes.
going out. So that will be credited. I hope this is clear now for you. So let
Yes.
me give you one more example here. Suppose after some time you sold the laptop and the laptop had left your business. So what will be the entry here? Can someone
Cash.
try?
Cash. Cash will be
Cash
debit
out.
and laptop will be credit.
Correct. So cash will be debit and laptop will be credit. So how we get these entries? Simply by looking into the golden rule. So here what we did, we sold the laptop and return we got the cash. So when we are getting the cash, what we do? Debit what comes in. We debited the cash and credit what goes out. Laptop is going out. So we credited the laptop. Simple, right? So whenever a something valuable enter the business, we will debit it, and whenever it leaves, we credit it. So that is the rule of real account. So moving on to the next accounting principle, that is Nominal account. So nominal account relates to income, expense, and gains. So here anyone who is already aware about the nominal account?
Debit all incomes, debit all expenses, and credit all incomes.
Correct. So here the rule says debit all expenses and losses,
Credit all
credit all,
incomes and gains.
correct. So let's understand with the example. Suppose let's take the coffee shop example only. So I don't have any other example today. So you are running your coffee shop and you opened your new branch. And for opening up that branch, you took a rental property, like you are paying a monthly rent for it. So here the rent is an expense for us, right? As we need to pay it to the rent owner, the amount every month. So therefore, what we will be doing, like what entry the system will generate here as per the accounting
Rent
rule.
rent will be debit.
Rent,
Correct. And what
rent is
will
a
be
debit,
credited?
interest or incomes.
Sales will be credited.
No. So basically, I've told you that we will be paying a rent. Like we will be paying a rent on cash. So you said correct, like rent will be debited, but what will be credited?
Cash will be credited.
Cash.
Correct. So as per the, if you see the accounting rule, all debit all expenses and losses. So here we are paying the rent, right? So rent is an expense for us. So we will debit the rent and credit all income and gains. And what we will be paying in terms of that? We will be paying a cash. So
Cash.
cash
Cash.
will be credited. So another example I wanted to give you here. So for example, a customer buys a coffee from your coffee shop worth of like 500 rupees. So the coffee is an income for us. So what will be the accounting entry?
Um, mm,
Can someone try?
Can you repeat the question once?
yes.
So like you, someone like one of your customer had bought the coffee from you at the value of 500. So in that case, as per this accounting golden rule, what will be the accounting entry?
Cash account debtor to the person account.
Customer of 500 worth of debit.
So simple, like whenever the
Debit is
business
a
earn
coffee.
money,
Revenue account is credit and customer account is
Shravan, I think it's went to real account, under real account.
no, still
Coffee
we
is
are on this
coffee is
only
debit.
because
Coffee worth is debit.
Yes.
Cash is credit.
correct. See, like right now, if you read this, debit all expenses and losses, credit all income and gains. So as I told you, like we sold a coffee of 500 rupees. So that is an income for us, right? So if you read here, all income and gains will be credited. So when we sold, that is a sales for us, right? So we will credit that as a, we will say credit the sales
Sales account
and
credit.
what went from the like during
Coffee
the
account
transaction
debited.
coffee. So the coffee account will be debited. So you understood, right? Like what I'm trying to say here. Are you able to relate it, guys?
yes, yes.
Yes.
So these are all the traditional golden rules of accounting and they are useful because they help you understand how the accounting developed over time and also in real time as well. Like when you will be working in the real time, the user will come to you and ask you that I want my this account to be credited and this account to be debited. So that time you will be able to answer him and like will be able to speak in his language only when you understand this stuff. So now I wanted everyone to pay a close attention. So like most of you might think that SAP will be working on these three golden rules what we discussed, like personal, real, nominal. You might have this doubt in mind, right? Like SAP in system also the system will consider these golden rules to post the entries, correct? The answer is not exactly. SAP follows the more of like modern accounting concepts. Instead of system asking whether it's a personal account, whether it's a real account before posting the entries, SAP will primarily look at the type of account involved. It will follow the account approach to post this entry. It won't be looking like whether it's a personal account, whether it's a real account, whether it's a nominal account. It will mostly look in terms of these categories, like whether it's assets, whether it's an liabilities, whether it's an equity, whether it's an income, whether it's an expense. So whatever the terms which we discussed earlier, the system will consider those terms to post the entries in the system. It won't consider the golden rules. Like it won't be considering the golden rules for the posting of the entries. For example, you are like yeah, when we bought the loan from the bank and you are prepaying the bank loan and you are posting to a bank GL account. So bank is something we will be considering as an asset, right? Like the place where we store our money. So money is as an bank account is an asset for us. So in that case, what we'll do, the SAP will know it as an asset account. And if you are posting to a vendor, SAP it as a liability account. And based on that, if it will generate the accounting entry. I mean, the based on the nature of the transaction. So instead of memorizing the traditional rules every time, you just need to started thinking in terms of account classification, how they impact the financial statements. So why we need to learn the golden rules, like as the SAP will be following the more of account approach, right? You might be having this question. If SAP uses the modern accounting, why we still need to learn these rules? So there are three reasons. First, it will strengthen your accounting foundation. And second, it will like many accounting interviewers will be like during your accounting interviews, the interviewers might ask you this question, like what are the golden rules? And they wanted to know like how strong you are at the accounting foundation. And third, once you understand these rules, you will be able to understand the debit and credit. So think of this accounting golden rules as an alphabet before writing a sentence in simple. So they are the basic upon which everything else is built. So I hope that everyone are clear about the accounting rules. So before moving to the final topic, if you are guys having any questions, yeah, feel free to ask. I hope that you guys are able to understand like what I am trying to convey.
Yes.
Yes, sir.
Yes.
Yeah. So I hope that the concepts are clear for you. Yeah, Shamil, you have raised your hand.
So yes, Shravan. So here, what you're trying to say is, instead of using accounting, uh, principles of account, we just directly go for accounting approach which are there in the SAP.
See, basically, the golden rules are something which are like a more of a traditional approach. But if you see from the system standpoint of view, it follows the rules itself. Like the system follows the rules. But the posting of the entries that happens with the help of the account group. I mean, like for example, if you are paying the loan to the bank, so bank is an asset, right? And system will think that we are paying something. So based on that, it will pass on the journal entries into the system.
Mm.
Will it not be a mismatch? Because the exact, I mean, the transaction should be recorded correctly. But if the system is deducting it different way, it will be a mismatch, right? And an error.
No, no. See, right now we haven't touched any system as of now, right? So, like once we started with the system, I will be showing you the document type and all that. So there are several prerequisites before posting up the entry in the system, like the document type, journal entry type, all that. So once we started that topic, then you will be able to align like what I have been trying to say in this class.
Oh,
I understood your
okay.
point, like how will the system segregate the entries, right, while posting in the
Yeah, yeah.
system. So
Yes,
that
once you,
there are some prerequisites which we will be covering during the hands-on. So that time you will be able to relate how the system is posting those entries.
Okay. Thank you.
Yeah. I hope that we are good to move to the final topic, that is debit and credit. So here anyone who have already been working in SAP might aware about this debit and credit. So this is a topic where most of the students gets confused. So whenever I ask what is debit and what is credit, many of you might get started to thinking like debit means money coming in, credit means money going out. Like you will be starting to relate more of like the golden rules what we have discussed. So if you see in general, debit does not always means that money coming in, and credit does not always means that money going out. Guys, if it possible that I extend more of like 5 minutes, is it?
Sure.
yeah, sure.
Yeah, thanks for
Sure.
that.
Sure, sure.
Yeah, thanks for that. Yeah. So as I told you, like debit does not always means money coming in, credit does not always means money going out. By the end of the class, like I will be trying to make you understand why it's not like that. So that don't try to memorize any rule. Instead, understand the logic behind the debit and credit. So imagine like you have 1,000 rupees in your hand right now in a cash. Okay. And suppose your friend comes to you and he returns you 500 rupees, which he borrowed from you for a long time back. So how much money we are having right now? That will be 1,500, right?
Yes.
So this is the cash we are holding right now. So so here we had earlier 1,000 rupees and we received 500. Now the value went up, the amount increased, correct?
Yes.
Yes.
So unlike, let's consider one more situation here. You go to the restaurant and you order something and you spend 300 rupees. Okay, and to to buy some food. So how much cash we are right now? We will be
12.
having around
1200.
1,200
1200.
rupees. Correct? So here your cash got decreased. Correct? Simple, right?
Yes.
Nobody had to memorize anything. We simply looked at the situation and be able to see like whether cash has increased, whether cash has decreased. So that's how exactly the accounting works. So as we know, like cash is something we own, right? And we already learned that. So cash is an asset for us. Now remember this simple rule. Whenever asset increase, we will debit it. Whenever asset decrease, we will credit it. I will tell you like what is the reason behind it. So initially we were having 1000 rupees cash, right, in a hand, like when earlier. And after some time, our friend returned rupees 500 rupees. That is also in cash. And our total value became 1500. Okay. Till here, it's clear, right? Our cash got increased and it became 1500. So what we do, we went to the restaurant and we bought this food. Okay, we spent on food. So if you see, as per the this principle, asset increase, we will debit it. And when asset decreases, we will credit it. You understood what I'm trying to say? Like this principle applies whenever if there is an asset is involved. So based on this system will segregate whether it's debit or a credit. So whenever if an asset increases, the system will automatically consider that entry as a debit, and whenever the asset decreases, the system will consider we will consider it as a credit.
Yes, I understood that point, but why exactly this is being used? Like only asset increases we debit it. Why exactly this we are using it?
So based on this, the accounting standards were defined actually. Based on this, we defined the accounting standards. So similarly, I've shown you the asset side of it, right? Now let's see the payable side of it. Just a minute. Yeah, so as you had a doubt like why debit left, why we credited the asset when increased, rules, golden rules, all this come to your mind, right? So ask yourself one question like what happened to the account? Like did it increase or a decrease? So right now if we see when we spent on 1000, it increases like when we had a cash, when we received the 500, it increases and it went to the 1500. And when we spent, it decreases. So similarly, in case of asset increases, we debit it, and in case of asset decreases, we will credit it. So this is a rule we follow the in accounting principle.
Here cash is asset.
Correct. And this is a liability, right? 300 is a liability, correct? So that's why we are credit. So what I will do, like I already took a much time of your guys today. So we will continue with this class tomorrow, where I will be explain you in detail. Like due to the time shortage, I won't be able to do it right now. So tomorrow when we'll meeting, I will be clearly explaining it to you this concept before moving ahead. Hope that works for everyone.
Yes, yes. Please, explain this again about debit and credit. I'm clear about the
Sure, sure.
accounting principle and guideline rules.
Hmm.
Only confused
Yeah,
about this.
because today we might have covered lot of like debit side rules and all. It might getting confused to you right now. But tomorrow, yeah, definitely we will be starting again with this topic. Of like we will be covering like 10 to 15 minutes on this till you guys are clear. So that once you guys are clear on this, then we will be
And
moving ahead with another topic. As like we have already crossed the 10 minutes and you guys might have other work as well, right? So I don't wanted to stretch more today on this. So tomorrow, yeah, definitely we will cover it if
Sure,
everyone
sure,
are aligned to it.
sure.
Yeah. So yeah, if anyone have any questions on today, whatever things we discussed, yeah, feel free to ask. I will be definitely sharing you the recording and the notes as well so that you can refer.
I'm not receiving the recording, Shravan. Are you sending it on the mail?
Sure, I will just coordinate once with KNR. He will be sharing you the recording of both the sessions.
Sure, sure.
Yeah, anyone, any questions?